We are all about the early retirement movement on this channel. Investing, starting a business that requires little time commitment, or renting out your house are some of the best ways to generate passive income and retire early. However, investing in the massive electric vehicle company Tesla, owned by billionaire Elon Musk, isn't the best method to retire early. Purchasing growth stocks, such as Tesla, is an excellent way to generate passive income. We're all familiar with the computation by this point. As is frequently stated, investing $1,000 in Tesla in 2011 would now be valued $204,000. Therefore, let's aim a little bit further out than usual 10 years since 2011. How about we decide on 2031 as our reasonable goal? In order to retire then, how many Tesla shares would we need? When and where should you invest your savings to do that? Click the like button, subscribe, and watch more to learn more. The acronym for financial independence is FIRE. Take an early retirement. People who are motivated to retire considerably earlier than the age at which most people may expect to be financially independent based on their current salary and lifestyle, also known as FIRE, are becoming more and more popular. FIRE was inspired by the best-selling book Your Money or Your Life by Vicki Robin and Joe Dominguez. Readers were urged to calculate the hours needed to pay for each item in the book. Due to changes in society, fewer people now aspire to have multi-decade careers. Other than pension funds, what other solutions are there for this issue? The ability to retire comfortably is typically an illusion because so few individuals can truly achieve it. A FIRE believer invests far more in their future than the average individual does. To put money aside. For investments, especially in a future-oriented company like Tesla, you should start early. This will help you accumulate retirement savings that will eventually be able to secure your financial future. Other than pension funds, what other solutions are there for this issue? To put it another way, raise your savings rate to the point where you can purchase Tesla shares with an eye toward 2031. The biggest inflation rates in decades were recorded in 2021 and 2022 alone, more than 8%, even if this is significantly greater than historical averages. You need at least account for an approximate 2% annual inflation rate. This is where compound interest investing comes into play. The COVID-19 retirement wave has resulted in an estimated 3 million additional persons reaching retirement age. This is the pleasure of investing, set inflation aside for a moment. Even at just 20 years old, Tesla is already dominating its industry, opening doors for a more sustainable future, and drawing in a sizable number of hungry investors. Its stock's ongoing slide appears to have stopped. For some, might it be a wise investment, but that doesn't mean that everyone ought to. Does it? It is not a good idea to put all your eggs in one basket, so to speak, as this raises the likelihood that you may lose a sizable amount of your investment in a single company or industry. Never risk your life money in such a way. However, the cost of Tesla stock is an additional element that will restrict your spending. At around $200 per share, the present market price may be a challenge for those with limited funds or those unable to purchase an entire share. Fractional shares would be a better choice. It's important to remember that not every broker will make it easier to buy fractional shares of Tesla. The long-term potential of the company must also be taken into account. Even if the 2017 study found that equities outperform treasury bills, you can better manage your money if you stick to wise investment choices. 52% of the time, the stock market has outperformed government bonds. We believe the Hendrik Bessemer estimate from Arizona State University, which states that approximately 26,000 companies declared bankruptcy between 1,926 and 2016 to be reliable. Nevertheless, despite the uncertainty surrounding the company's future, we think it is a smart decision to invest in Tesla. Quality and safety are now fundamental to Tesla's brand identity. After setting records for sales, profits, and cash flow in 2020, 2021, and 2022, Tesla concluded the year with $24.6 billion in debt and $7.7 billion in cash. Additionally, the company is expected to have $24.6 billion in net cash by 2025. The early investors in Tesla might become extremely wealthy if the company is able to meet its goals of boosting annual deliveries by 41% from 500,000 in 2020 to 4 million in 2026. Because of its growing economies of scale and higher average selling prices, researchers project that Tesla will rank among the most profitable automakers in the world by 2031 based on the current coin market price. Regarding the $2,500 price tag, which is 287% more than the stock's current worth, what are other investors thinking? The vast majority of finance experts recommend purchasing because the bull market is venturing into unknown waters. Diversification is necessary. Conservatives recoiled as DeBolt Page, a former Google employee and devoted Tesla fan, went to social media to reveal his newfound wealth. Bulls and Tesla shouted their excitement for the future of the conservative corporation. A blog post claims that investing in it is still dangerous, but I would never, ever risk all on one investment that might make a huge profit on its own. I can't possibly lose money though because I'm spreading my bets. 14,850 shares of Tesla are owned by DeBolt, whose average cost basis is $58. He believes that the 2,500 shares he purchased in 2013 at a price of $7.50 a share are currently valued at $2.2 million. Perhaps 50 years from now, there won't be another Tesla. One of the most crucial aspects of retirement planning is figuring out how much money is needed to retire. What is the approximate number of Tesla shares required to retire? Your pay and retirement plans will ultimately dictate the response. If you are aware of the suggested savings rate for your age group, you may make better retirement plans, while it may be simpler to advise a retirement savings amount. Based on your age, the reality is that your goals are probably very different from those of your siblings, neighbors, or even coworkers. Most authorities concur that a variety of circumstances, most notably your lifestyle choices, influence your specific requirement. For instance, if you make $100,000 before you retire, you will need at least $80,000 annually in retirement. Inflation and stock appreciation are not considered. However, you ought to have saved at least 25 times your annual cost before retiring. For instance, $1.25 million in savings would be needed to pay for a $50,000 annual expense. $2.5 million would be needed to obtain $100,000. To comfortably retire, you need to save roughly 25 times your yearly income. Online retirement calculators at the very least estimate that if you save 20% of your salary annually and anticipated 5 to 7% returns on your investments after inflation, you could retire in 37 years or till 2031. If you set aside 25% of your income for savings, it would take 31 years. How then can we bring about this fire? To retire, one does not need to acquire a certain quantity of Tesla shares. Pleasantly. While you might apply the techniques in the video to calculate a customized amount, each person's answer would be different based on their background, expected income, planned lifestyle, and other factors. Finally, but equally important, diversify your wagers. By adding Tesla to your portfolio, you can diversify the impact of any one industry on your savings and profit from their growth if you also have assets in other automakers or renewable energy companies. What is the approximate number of Tesla shares you own? In 2031, everyone retires. What number will you require? And leave a remark below. We would adore to hear what you think. Please remember to subscribe and give this video a thumbs up if you enjoy it. In the upcoming video, I'll see you. I'm grateful.